ladies and gentlemen, hello and welcome to another entry in Kalkine Media's popular InvestNest webinar series. This entry is titled 3 Resource Players with Elevated Focus on ESG and Sustainability. My name is James Preston. I'm an anchor and reporter with Kalkine TV, and I'll be your moderator for today's event. And just before we get started with the session itself, it's extremely important that you are aware that this webinar is for informational purposes only and is not a solicitation or recommendation to buy, sell or hold the stock of the company or any companies that might be discussed today, or engage in any investment activity under discussion. That is completely at your discretion. So make sure that you consult with a respective lawyer or financial advisor, whatever is best suited to your needs. Now, the key idea of InvestNest webinars is to present our audience with a panel of experts who share the potential of their business, their growth strategies, along with the company's value and vision. Not just this, but we uncover unheard stories from the business head honchos and how they've worked towards their success in innovation. And in particular, for this webinar, we are also taking a good look, of course, at environmental sustainability within the world of mining practices. So there is a lot to cover, and we do indeed need to get stuck into it pretty quickly. So just before I give the full info disclosure as to what exactly we'll be covering today, keep in mind that we do have 3 presenters here who will be providing their expert opinions and giving us a bit of an insight into their business. Those will be 15-minute individual presentations. And then at the conclusion, we'll have a Q&A round. And of course, you can ask a few questions yourself by having a look at the Zoom box. And on the bottom right corner, you might see in there, it says Q&A. That's where you can add your questions. If you are an audience member, simply pop them in there. And then also we do have a little chat box that you can also refer to as well. So any of those questions that come through, I'll be able to have a look at them, pass them on to our guest presenters. Alrighty, so that's all the boring stuff, shall we say. Let's now get into the crux of things. Now, the menace of climate change and related issues has compelled mining companies across the globe to level up their game in addressing the environmental, social, and governance agenda, or as we like to call it, ESG. Sustainability and ESG are fast becoming the sector's novel point of convergence, and it's now a priority for most companies involved in mining and exploration to deal with ESG in their own capacity. However, there are certain players who have managed to deliver better on ESG by just taking a bit more time, care, and of course, a little bit of extra effort in their projects. And some of those companies leading the space also happen to be Kalkine Media's valued clients, and they are the ones who are joining us today. So to offer presentations and answer your questions, we are extremely pleased to have with us the Executive Director of Black Canyon Limited, Brendan Cummins, the Managing Director of Aeramentum Resources, Mr. Geoff Muers, and also the Managing Director of VRX Silica, Bruce Maluish. So those are our experts for today. Let's introduce the first one, namely Brendan Cummins. And Brendan comes with more than 25 years of experience as a mine and exploration geologist. He has some severe experience in terms of engagements with exploration geology, resource definition, project evaluation and feasibility studies across precious metals, base metals, iron ore, and industrial mineral projects across Australia, as well as internationally. So a whole ton of experience for Brendan, and of course, now working with Black Canyon. We're focused on manganese and also have a number of different projects in the East Pilbara region. So to talk more in depth about what Black Canyon is doing and also his own expertise in the space, I now throw it over to Brendan. Brendan, thank you so much for being here with us today. And if you could please share your screen and your presentation for us, that'd be wonderful, but it's a pleasure to have you with us here.
Yeah, thanks, James. Appreciate the introduction. You've sort of put up the expectation there quite high, but yeah, look, I've been kicking rocks around the place for quite a few years now, and really landed in a great place with Black Canyon and looking for manganese up in the Pilbara of Western Australia. Fantastic opportunity here of manganese in both the steel industry, but also the growing demand for manganese sulfate within batteries as well. So looking forward to sort of run potential investors through the presentation and also to take questions at the end. So without any further ado, I'll just sort of jump in. I think James has covered off on the forward-looking statements. We're not giving investment advice. Cautionary statement, I will just note that I do have information in here with regards to a scoping study we released about 2 months ago, and scoping study is plus or minus 35% in terms of accuracy, so bear that in mind. So a bit about, before we sort of go into what we're doing at Lake Canyon, I just want to give a bit of an overview of the company and our corporate snapshot. So Lake Canyon listed on the Australian Stock Exchange in May last year, 2021. So we're about 18 months old now, and we've been really busy exploring and defining resources. We've got about 51 million shares on issue, market cap around 10.8, so extremely tight capital structure, highly leveraged, cash in bank, and you can see that BCA shareholders, board and management, we own a fairly healthy 12%, and the top 20 shareholders own about 37%, so it's a very tight capital structure and leverage for success. In terms of the board, experienced board, and we are really technically focused. We've got 2 geologists, 1 geophysicist, and 1 finance corporate director, non-executive director as well. So, and that's really appropriate, I guess, for the stage that the company is in at the moment. Really at that sort of early stage exploration phase, and then moving into development phase. And as the company evolves, we'll obviously make sure that we've got the right people through the management, and also in the upper levels with the directorships, etc. Just a bit about myself. I've worked fairly extensively in exploration, resource development, through to developing projects. My last project I was with was a company called Australian Resources, and they're currently in construction and almost finished building a $350 million plant here in WA to produce mineral sands. Whilst I'm a geologist, I was actually heavily involved in the approvals processes and stakeholder engagement, which included working fairly closely with the heritage groups up in that area as well, but liaising with all the regulators, the EPA, Muers, and to get this project permit ready, and which is great. It was a great experience. It's certainly a challenge at times, but it's probably put me in good stead now to work through what we need to achieve here at Lake Canyon up there in the Pilbara. As I sort of mentioned, I guess the 5 key pillars for Lake Canyon really are: we are manganese focused. That's all we're looking for. We're not looking for any other metals. It's just manganese, because we see it as a key contributor to the steel industry, but also a growing component in the EV battery space. Fantastic location up there in the eastern Pilbara. We're about 2.5 hours northeast of Newman. Plenty of infrastructure up and through there. Roads going all the way through to Port Hedland these days. I've been working in and around that area for over the past 20 years at different times, and infrastructure in the last 5 to 10 years has development of infrastructure has been phenomenal. So that's really helped companies like us get into the market. Mineral resources, we've managed to delineate in fairly short time a fairly substantial mineral resource, 100 million tonnes, about 10.5% manganese, which is a fantastic start, but a pretty clear strategy to grow the company and develop these opportunities into mines. And the first cab off the rank is really Flanagan Bore, and I'll run through that during the process. But also looking very seriously at the battery precursor, manganese sulfate, as well, and how we could possibly do downstream processing and capture some of that market as well. But at the end of the day, experience counts, and it's having the right team in place, and we are building an execution team as well. So manganese, really working into that ESG theme, is critical to a low carbon future. Whilst most of it is used in the steel industry, a growing portion of manganese is actually getting utilised in the battery market within nickel, manganese, cobalt cathodes, which are pretty much the battery packs that go into the majority of the electric vehicles these days, such as Tesla being a prime example. So each vehicle may have up to 30% manganese in the battery, which equates in real terms to 10 to 90 kilos of manganese. So quite a lot of manganese usage in the batteries, and people don't really talk about that so much. It's always about lithium and nickel and cobalt, but manganese is certainly right up there. And with the emergence of the lithium phosphate manganese batteries as well, which I'll go into a bit further, there's just probably a higher utilisation of manganese going forward than what people are really anticipating. Key market drivers, obviously strict emission bans in imposed by governments, and those dates are rapidly approaching. So we can just see only further uptake of electric vehicles, and really to reduce those emissions. And really encouragingly, there's a lot of support from government, both here locally in Australia, but also in the US, where they've just recently announced a inflation reduction package, which is looking at supporting the battery sector, and that's from supply of raw materials through to processing, and then through to the development of actual battery products. So a lot of impetus and a lot of people just really want to help de-risk and head towards that low carbon future. And what else is happening is the diversification of supply. That's going to become increasingly important, I suspect, with a lot of these battery minerals, which most of them sort of mined in other countries, but processed in China. And I suspect, just with the geopolitical situation, there will be a lot more countries such as the US and Europe looking to get their battery precursor materials from outside of China. So manganese, let's just have a look at that in a bit more detail and how it works in the batteries. As I was sort of explaining, the NMC batteries, there are a number of recipes that go into these batteries, but the M in an NMC battery is for manganese. And the ratios you can see there, 1-to-1 often with cobalt, but often can increase in the NMC 532, which is quite a popular battery as well. So there's quite a bit of manganese in that battery. But we're seeing a lot more requirement for manganese to go into the LFMP batteries, and this is happening really rapidly. It was only in July this year that Capital made an announcement about the M3P battery, which is essentially an LFP battery with manganese added, and it increases the range up to 700 kilometres now, which is almost on par with the NMC battery, but at the cost, at a serious discount to the cost of manufacturing an NMC battery. So that's really encouraging for the industry, and there are a number of others such as BID and LG who are also looking at this LFMP technology as well. So I think we will see a lot more of that. But the interesting stat on diversification are also shown down in the pie charts just below. You can see mining, most of it's outside of China. Then processing, 93% within China. Cathode production, the lion's share again in China. And then cell manufacturing, again, 73% out of China. So it's a bit like the rare earth story. I think there'll be a lot more companies looking to diversify their supplies out of China. I mean, it does make sense in a lot of ways because most of the batteries are made in China, the cars are made in China, so that's where most of it's coming from now. But I think sooner or later, the US is really starting to pick up in terms of its car manufacturing business, which used to be, used to be huge in America. And I think they'll have to pick up the ball and really start playing catch up to some extent as well. So the projects up there in the Pilbara, we've got about 2,500 square kilometres of tenure in Western Australia, and you can sort of see the tenements there, all in red, are 100% owned by Black Canyon, and we've also got a JV earning up to 75% with a company called Caramel Resources. What I'll do is you can look at the Woody manganese mine up there. So we're in a proven manganese producing belt, and also the Butcherbird manganese mine at either end of our tenement. So we're really well located in that area, and we're looking for hydrothermal style manganese, which is smaller tonnage, higher grade, and then supergene hosted, shale hosted manganese, which is large tonnage. And Flanagan Ball, we've got onto one of those really early, and we're endeavouring to move that one up the development curve. Just quickly, Oak Over East is it's one of those hydrothermal high grade targets. It's about 35 kilometres south of Woody. Woody is a mine that has been operating for about 60 years. It produces a DSO product, which is about 40% manganese, but it comes from 20 or 25 pits, and the pits average about 500,000 tonnes per pit. So fairly small, but high grade targets. And we've got a good 20 kilometres of strike down to the south of there, where we know there's a lot of manganese. You can see the photo there, paints 1,000 words that you can see the manganese in the geology through there. So we'll be spending a lot more time on that next year, I think, and just looking at getting onto some of these high grade hydrothermal targets. Balfour Regional really centres around the Flanagan Bore project, which I'll go into over the next few slides, but it's a regional play. We've really looked at the stratigraphy in this area, and we've identified prospective horizons, and we've gone about and just picked up those tenements, and we'll continue to work on those. So with Flanagan Bore, you can see it in that central area of the project. I'll just deep dive into that a bit more. It's really turning out to be our flagship project at Flanagan. When we picked up the ground last year with the joint venture with Kalkine Resources, there was only 12 drill holes in it. Since last year, we've done 2 drill programs for about 15,000 metres of drilling being completed. Come up with an indicated resource, so a fairly high confidence classification of 104 million tonnes at 10.5% manganese. The last drill program will undoubtedly increase that resource, and with the infill component will hopefully increase it up to measured. So very high confidence. It's got really excellent geological and grade continuity. Within there's a high-grade subset of about 30 million tonnes at 12.8% manganese, which is pretty much the basis of our scoping study, which we'll go into in the next few slides as well. But having that high-grade core is really important in terms of getting a mine up and running. It gives you something to get into straight away. It's all at surface, and in terms of strip ratio, it's very low. More information on the individual projects. So FB3 is one of the prospects there. We've defined 67 million tonnes at 10.4% manganese, and you can hopefully see in those pictures the width and the scale of this. It's about a kilometre by kilometre footprint. You can see the hill in the little picture down the bottom. It's just covered in manganese, and we're talking very thick intervals of manganese mineralisation, 30 to 40 metres at 13 to 20%. And all from surface here at FB3. This had never been drilled before, so it was a virgin discovery for the company. When I headed up there after we listed, I was so excited to see the amount of mineralisation at surface, and really couldn't wait to get the drill rigs on site to drill that out. Flanagan Bore, the LR1 project, that had 12 drill holes in it, so we knew that we were in the right thickness and grade range. And since then, we've also drilled more holes and defined a strike of it's over a kilometre, it's 800 metres wide again. Very big zone of mineralisation, 37 million tonnes, about 10.8%. Similar in terms of thickness and grade ranges as well. Both really solid resources in ground at indicated level. And a lot of mining projects, you've got to have the foundation for it. And for me, it's making sure that we've got that resource base covered and it's well drilled, and we know as much as we can about the geology and the mineralisation of that deposit as we can. We've also drilled diamond core into this, or metallurgical test work, which we'll look at on the next slide. So in terms of metallurgical studies, we have completed initial scoping level studies, and we are able to beneficiate this product from 10-11% in the ground up to over 30% manganese. So that's a fantastic start. And really all we're doing, if you look at the photos on the right-hand side, is removing the clay and the shale bands and leaving the manganese. So the dark black horizons are manganese, and the other horizons are just the clay. And so it's really giving it a good wash and scrub, can double the grade. And then after that, using heavy needle separation to float out the heavier manganese from the remaining silicates that might remain in there. So really good start, plenty more work to be done on that, and we're doing that now right in the labs. More metallurgical test work is being undertaken. The product will flow into the steel industry, but also looking at manganese sulfate with part of the battery precursor studies. And we recently announced we're being able to extract about 91% manganese out of this material, out of an oxide material. Again, a very good start. The traditional process of making manganese sulfate is getting electrolytic manganese metal, which costs a lot of money to produce, and then dissolving that to make manganese sulfate. But we're looking at a process where we can make manganese sulfate directly from these manganese oxide ores. So we're running those two strategies in parallel, being able to generate manganese concentrate, but also manganese sulfate that will feed into the battery market. And there's certainly interest in what we're doing in terms of downstream processing. The Flanagan Bore scoping study really, summarises what we've been doing at Flanagan Bore in terms of the financial metrics. looking at an NPV of 134 million, an IRR of 67%, which is really robust. And it's based on a production target of 36 million tonnes at about 11.7% manganese. Really long mine life, 20-year mine life, and in terms of being able to generate a solid customer base for both manganese concentrate and manganese sulphate going forward. Having a very long mine life certainly plays into our favour. Getting the mine actually up and running is probably looking at a $40 to $50 million Australian exercise. So that's the project area that we've got laid out more or less, and we're doing more detailed feasibility test work over the next 12 to 18 months to get this one done. So in terms of our ESG, we're really at the early stage of that journey, I guess, and the Flanagan Bore is where we are starting it. Most exploration companies are, we're really out there exploring and looking for mineralisation, and ESG does become a bit of a second thought. But as we start to really move up that development curve, ESG becomes more front and centre for us. And there are a number of ways we're looking at minimising our impacts on the environment and stakeholders. And I'll just run through those dot points just quickly. So I was actually just up on site a few days ago, and we were looking for water. Water is obviously very important for being able to process and develop a mine in this area. And we've been quite fortunate that we've come across some water shows in at least some of the holes that we drilled as part of that phase. But increasingly being able to show to the regulators that we have a sustainable water supply. We're not going to, we've got an aquifer that is able to have a good recharge. We're not going to draw down and impact other stakeholders in the region. Is also important. And also not impact some of the fauna, subterranean fauna that actually live within some of these aquifers as well. So we'll be looking at all those aspects to minimise those impacts. And then once we go into production, it's looking at means of water conservation through process design and water recycling. And we're already factoring in a tails thickener that extracts most of the water out before the tails heads out to the tail storage facility. So the fortunate thing is we do have time to plan now and get in place the pieces of in terms of conservation and minimising our water utilisation. Site energy looked really simple. Up in the Pilbara, plenty of blue skies, plenty of sun. So we'll be looking at installing a solar farm, and that can supply power for the processing plant, also administration, village accommodation. And there's a cost benefit in there as well by reducing our reliance on diesel power for these more remote sites. So I look forward to spending more time and working with the right partners in that space to get the right size solar farm set up for us. Excuse me. We're also embarking on baseline flora, vegetation and fauna studies. We see that there'll be a good 12 months of doing these baseline studies before we even go to the regulators. And that's because it's best to be armed with all the information. We'll be able to identify areas where there may be priority flora species that have been identified, particular vegetation associations, and also the fauna, particularly subterranean fauna and surface fauna as well. So those studies will kick off later this month, in November. We're starting our first on-ground surveys, and through next year we'll be doing the autumn and spring surveys as well, just to really increase our knowledge of the environment that we live in, and then we'll make the plans as to how we minimise those impacts on the environment as we go through the regulatory approval process. A lot of people talk about game changers, in terms of projects, but one of the highest OPEX expenses of this project is transport, and I'm really interested to learn more about the conversion of prime movers, being able to transport manganese concentrate from our site up to Port Hedland to the port using battery-operated prime movers. There's a company I've come across, I haven't reached out to them just yet, but called Janus Electric, based in New South Wales, another Australian company, which is fantastic. And they're really forged ahead with converting diesel prime movers into electric. So, not only are we reducing emissions with diesel, but as a potential operator in the future, we're looking at some pretty serious reduction in operating costs as well, which it all comes down to the bottom line. So that ticks a lot of boxes for the company. So I think ensuring that we can look at technologies like that, where they may have batteries that swap out, quick swap outs, and load up, deliver, swap out a battery, drive back to site. That seriously could be have a very high impact on reducing emissions, but also for the company as well. So in terms of offsetting carbon, EV, electric vehicle batteries, is an area that we really want to get into as well, and that's why we're embarking on this manganese sulfate strategy. So running that in parallel with what we're doing, on developing a mine, but looking at carving out a portion of that manganese oxide and developing manganese sulfate. I mean, ideally, that was something we would like to develop in Australia as well. The capex on making a manganese sulfate refinery is not insubstantial, and we will be looking at working through a scoping study and more feasibility studies over the next 12 months. So that'll be an exciting development for the company. I have no doubt about that. In terms of stakeholder engagement, obviously partial country where we're working on, but more importantly, traditional owners. We've had a number of surveys at Flanagan Bore to date, and we're working closely with the traditional owners, the Kalkine people up in that area, and the closest community is Jigalong Station, which is about 50 kilometres south of us, and we've had a lot of interaction with the Yinnapali people, which is it's good to see them on country. They love coming out to site and doing the surveys, and we had a couple of heritage monitors recently on site who spent a couple of nights out there as well, and from what I gather, there was quite a good number of yarns around the campfire, which was just building that rapport with the broader community as well is very important. So we do have an opportunity here at Black Canyon to grow the team and encourage the right culture, and I think that's something that we will be looking more deeply into over the next 12 to 18 months. Look, in summary, you can see through this, but we have had a really busy year, and now the next 12 to 18 months will be no different. It is really just getting out there, doing the job, ticking the boxes, getting this thing up the development curve, and hopefully looking at financing options in 18 months and get something up and running. Just the final bullet points. Hopefully I've been able to provide some of this information on investing in Black Canyon. Obviously manganese has contributed essential for the steel industry, but also becoming more critical for battery minerals. Really tight capital structure. We are doing the work, we're out there exploring, generating targets and completing drill outs, but also being able to rapidly delineate resources, do a scoping study, and now we're moving on to the detailed feasibility study. Looking at mineral processing, hydrology and hydrometallurgy, also looking to develop high purity manganese sulfate to facilitate the diversification of manganese sulfate to customers, hopefully through US and Europe. So that's about it for me. Hopefully we've provided some insight into the company and what we're doing out there at Flanagan Bore and regionally, and where we are on that ESG journey. We are starting out, but I think it's a critical part of the business and is increasingly important in terms of getting as part of our social responsibility as well.
Thank you very much, man. You mentioned it's been a very busy year, certainly a very busy presentation too. There's a lot of effort that's gone into that. So I do appreciate you taking us through all the ins and outs of what you're doing there with Black Canyon. And look, quite exciting times, I'd say. I think the next 12 months for you could be very, very interesting. Yeah, absolutely. We've kicked a lot of goals and there's plenty more to do. But just my background in working with these types of projects, you can certainly see development happening out here at some point in time. Yeah, look, a very exciting future for Black Canyon, and we'll catch up with you in a little bit with some extra questions, but thank you so much for your presentation. No worries. Talk to you later. Let's keep on moving forward now. We do have our next guest speaker, namely Mr. Geoff Muers, the Managing Director of Aeramentum Resources. And Geoff has been instrumental in setting up the company and bringing the team together to first acquire the asset and then pursue a listing on the ASX. He has extensive experience of over 2 decades in the mining industry, with a background in geology and mining finance, and of course, a passion for base and precious metal developments. He's also acted as a consultant for a wide range of public and private mining investors. And of course, he also currently divides his time between Cyprus and Australia. As for the company itself, Aeramentum Resources is seeking to list on the ASX in the coming weeks, and they are seeking to raise 4.5 million Aussie dollars, or potentially even as high as 6 million Aussie dollars to fund resources for drilling at the Laxia prospect, which is a high-grade copper, cobalt, nickel project in the Republic of Cyprus. Now, there's a lot more nuances to all that particular fundraising there, and of course the things that are happening with Aeramentum Resources. And so the best way to possibly deliver all that information is for me to turn it over to Geoff. Geoff, thank you so much for being here with us today for the InvestNest webinar.
Oh, thank you, James. Right, just the usual disclaimer and forward-looking statements. We do have a prospectus available on our website. It's open to all investors, not just sophisticated. And usual disclaimers, if I talk about potential production or resources, we don't have resources at the moment, so need to bear that in mind in relation to this disclaimer page. An overview: our company was formed in mid-2021 to acquire this project. I first visited the project in 2017, and so we've been following the project, and the opportunity came up to purchase it last year. We made an offer to Keras Mineral Resources, about £500,000. Most of that's paid for. We've got one payment of £200,000, and we will own the project 100%. And I think talking about ESG today being one of the topics, and sustainability, myself and the chairman, we'd looked all around the world really, but particularly in Europe for cobalt projects. That was the driver. Of course, this project has a lot of nickel and copper as well, which are important battery metals. But many of the areas that have had historic mining in Europe, they're in places that are quite built up. So you might have them in places, say, similar to the Yarra Valley in Victoria, or say Bowral in New South Wales, and particularly in places like Germany and other parts of Europe. Other countries have got permitting issues, can take you 3 or 4 years to get your permits. We found in Cyprus 3 or 4 months, but also places like Finland, you can have cobalt deposits right on a major river course. You can have metallurgical issues, you can have 20% arsenic. So when we came across Cyprus, we liked it for a number of reasons, but in the environment, the country itself, we quite liked. So we have 3 major projects. We've got over 40 kilometres of strike length, and we're 45 minutes drive from a major export shipping terminal at Limassol. Cyprus has got a big copper mining history back to the Roman times, so I'll touch on that. We've got up to 1.5 kilometres of old sampling in the adits, and that was put in by Hellenic Mining in the 50s, and essentially no real work done in the last 60 years, except some drilling that was done in 2013-14, which got some pretty good results. So we're planning to do some diamond drilling as soon as we list in November. We have a diamond rig on site, and we'll hopefully have first assays out within 6 to 8 weeks of starting to drill. We're raising 4.5 to 6 million. Raising's going quite well. We're talking to a few cornerstone people, including institutions, corporates, and other investors. So you can see our tenements on the right-hand side there. We've got a total of 8 tenements at the moment, including 2 applications. A summary of the structure: tight capital structure, not dissimilar to the last company that presented. We'll have about 50 million shares on issue at 20 cents, 10 mil market cap. There's a couple of million options out there, quite tightly held. We actually responded to investor feedback. We reduced the amount of capital held by directors by 6 million shares, and that cancellation's gone through. So I think the capital structure is about right for this market. Background: myself, James did introduce me. I'm a geologist. I worked in finance for about 7 years, and I've been consulting to companies around the world. Rob Thompson, the mining engineer, we first met over 10 years ago. We worked together in Africa, been involved in projects in Indonesia. Rob built for Oxiana their Sepon and Chartreuse mines. And Rob and myself were involved early in the year with an IPO called Southern Palladium. that Rob put the board together. I did some early work on it, and that was a 50-cent IPO, traded as high as $1.40, I think, and it's now around about $1. So that's been quite successful. We'll be hoping for the same success with this company. Ben Jarvis is a fairly well-known resource director and investor, and runs 6 Degrees Investor Relations. We've also got a lot of geologists. We've got local geologists, and we do use some expat geologists in Cyprus. The market in Europe, I think that's a very important thematic here. The demand for electric vehicles is growing. Europe's one of the fastest growing markets. They're planning to ban internal combustion engines by 2030 and 2035 in different countries. There's over 20 major battery factories, called these so-called gigafactories, under construction. And it recently, Benchmark Minerals came out and said we need another 60 or 70 new mines for nickel and cobalt. So I think the demand's certainly there, even though, as the last presenter touched on, they're trying to reduce the amount of cobalt. It's gone from 20 kilos in the Tesla batteries, I think now down to 10, and a lot of batteries won't use cobalt. But when you have 70% of cobalt coming out of the DRC, Russia's the second biggest producer at 9%, so that's 80% of cobalt supply from countries that make people a bit nervous. I think there'll be certainly demand for cobalt going forward, although as I'll demonstrate, it's not the only mineral that we'll be reliant on this project. Map here showing where Cyprus is. You can see all the battery factories, not all of them, but a lot of them there that are going in. They're all different types. You've got vanadium redox, you've got zinc batteries. There's all sorts of different chemistries, but at the end of the day, they're going to need a lot of metals. Cyprus itself was a major copper producer, over 70 million tonnes exploited until the 1970s. And really what happened when the Turkish occupation in the north, a lot of business owners left, the mine shut down, but it's been politically stable for the last sort of 60 years. It joined the EU, the Republic of Cyprus in the south in 2006, and so it's benefited really from a lot of stimulus money's gone in. You've got 4-lane freeways, wind farms, and excellent infrastructure. And I think that will be very helpful if we get to the stage of building a mine here. European Battery Alliance, we'll look to join that at some point. I think if we get to the stage of proving up a resource and a project, we'll have a lot of interest from manufacturers and other people wanting to do offtake deals on the metals that we can produce. So 3 projects in summary. We have the Laxia project, which is the main project we bought. We think we can get a resource there within 12 months, and a lot of very good grades. The ore body outcrops for over 1 kilometre. Some drilling that was done almost 10 years ago, showing some pretty good intercepts here. We've got good grades of gold, copper and cobalt. The nickel's about 0.2%, and we're hoping that nickel grade will improve with depth. That's a geological theory that I'll touch on a little bit later. Pevkos is a second project about 2 k's to the south. It's high grades of nickel. You've got a drill intercept there, 2 metres at 3% nickel plus 3 grams of gold. And it's right next to a major quarry. So Cyprus has seen this big expansion of the quarrying industry from 2.5 million tonnes 5 years ago to about 8-9 million tonnes. All that aggregate's going into this, a lot of the construction boom underway on the coast. And so people say that they have a big mining industry. There has been a copper gold mine operating in the north, but there's been a lot of quarries being built. And certainly what we're looking at, the scale and the design of any mine will not be of the same sort of scale as these quarries. So from an environmental point of view, much lower impact. We'll be looking at underground mining most likely. So Laxia is our main target. The ore body itself, shown in red here, outcrops for up to 1 kilometre. It's open to the north and south, peg ground to the north. There's been a lot of sampling done on it over the years, and a little bit of drilling. You can see some of the grades. Of course, gold often enriches at surface and copper leaches out, and nickel and cobalt as well. So you can see some of the gold grades here. There's quite a few areas that are accessible in terms of the adits. There's some very good sampling, as I said, and you've got a road pretty much to site. There's a small upgrade to an old road from the 50s we'll make here to get into the drilling, but the land is essentially state forest. They're happy for us to go in and upgrade the roads, helps them with their firefighting, but it's very sparse forest, the topography is quite steep, and we're a couple of kilometres from the nearest village, so it's a very good location. PEVCOS project, showing a cross section here with that intercept with the 3% nickel. Some of the historical adit grades here, you've got up to 11% nickel, 3 or 4% copper and 3% cobalt, so some very good grades in the adits. A lot of those adits are closed in now on the edge of the quarry, but we'll probably look to do drilling there, and that's our second priority project. Our third one at Apsu we discovered in our reconnaissance licence. We're reclassifying that at the moment so we can drill that next year. And there's an old drill hole shown here, 25 metre zone there of chalcopyrite. Unfortunately, we don't have the assays, but you can see in the top right there, I'm standing next to an outcrop, quite copper rich. A lot of copper mining there historically, even potentially in Roman times, they were mining copper there 2,000 years ago. So it's got a long history. There's a lot of targets, and as I've mentioned, it's not just copper we're looking for. So use of funds, we raised 4.5. We can do over 6,000 metres of diamond drilling. We can double that, we raised 6. And the drill rig, as I mentioned, ready to go in November in country. Keep the money in the ground. I'll be the only full-time employee, everyone else is contractors, and we share an office in Cyprus. We keep the overheads very low, and most of those costs for the IPO have been paid for, and just that vendor payment to own the project 100%. So a summary here, and I will just after this go into a couple of slides in the appendix, but we've got a rare mix of metals, potential for multiple revenue streams should we prove up a mine, 100% owned projects, relatively low EV, 5.6 million, and it's brownfields drilling. So we know where we're drilling. We think there's a very good likelihood we will hit the ore body and be able to show some good results. Shallow diamond holes at first. Next year we'll step back and do 300 metre holes at Black Sierra. Hopefully by the end of next year we can have a resource. We may have a exploration target out before then. Favourable jurisdiction, 12% corporate tax, and we very much like the attitude of the government. They're in favour of redeveloping the mining industry, and being in the EU we can benefit from all the expertise in the EU, a lot of the potential funding that may be available, and we're very close to these growing markets. Infrastructure-wise, Cyprus is quite amazing. These 4-lane freeways, you've got a whole population on the island of not much more than 1 million people, so it's a good place to drive, but also there's a lot of infrastructure like sealed roads to pretty much to site. So timeline, we're raising now, we're hoping to close the end of the month, we'll be listing November, drilling essentially within a few weeks of listing we hope, and we can drill all year round in Cyprus. There's a wet season, but we don't think that'll delay us too much because the roads are pretty good. We'd like to fly some airborne geophysics next year and get back into the mapping and identify some new prospects. I will just touch quickly on a couple of appendix slides. We've got 40 kilometres of strike length, which is this blue line here between the ultramafics and the intrusive rocks, and that gives rise to this serpentinisation, which is often a focus for the mineralisation. And without getting too technical, there's a lot of different rock types. You can see about 30 or 40 different rock types. Typical ultramafic nickel geology. If any of you listeners are nickel geologists or have friends who are nickel geologists, they'll know a lot of these terminologies here, and pillow lavas and sheeted dikes, pyroxenites. It's a very good setting for a nickel deposit, amongst other things we're looking at. So interestingly here, I was in Cyprus 2017, a geologist by the name of Ian Pringle was also there as a consultant when we were looking at this project initially, and he just got off the plane from Bouazir in Morocco. They've been mining there for 90 years. It's one of the highest grade cobalt mines in the world at over 1% cobalt, 2 to 3% nickel plus gold. They're mining now at about 900 metres deep, and it's not a big mine. They do about 250 to 350,000 tonne a year. They just did an offtake agreement with Renault for 5,000 tonnes a year of cobalt sulfate, and all the similarities are there. The age of the rocks, the mineralisation style. When we look at the core we're seeing in Cyprus, very similar to what you get here in Morocco in the central photo. Morocco at the top there with the decline. They're not mining the diorites versus our PEFCOS project in the south where they're mining the diorites. So there is a theory that Morocco and Cyprus will join potentially, and they'll separate along this big transform fault, intraplate fault. That's just a theory, but we're certainly very encouraged by this geology, and if it hangs together, this theory, then as we drill deeper into this system, we should see the cobalt and nickel grades improve. The modelling we've done on the ore body shows it does hang together based on the past drilling. You see on the right here, most of that's pretty shallow, 30, 40 metres down. Some intersections 150 metres down, but certainly a lot of potential to extend at depth. The copper grades are pretty good, and the gold and cobalt, of course, up to sort of 0.4%. Cobalt over 50,000 a tonne. Some of those values are quite high in terms of metals. So there's a 8 metre wide zone in this adit here. We've been in and sampled. We're going to put the rig in there first. It outcrops at surface here. We just did a 50 kilo sampling program. We've got some pretty good grades at surface, bearing in mind that cobalt and nickel and copper to a lesser extent often leach at surface. So we don't necessarily think those grades are representative, but they're very encouraging, particularly when you see this sort of 3 to 4 grams gold in the ore, which should be an important component in terms of value. And again, just another shot of West Laxia here, where we're going to drill about 12 to 15 holes along this western limb, and we should have first assays out in January. I'll put this slide in. It's just showing some examples of high-grade VMS type deposits. This is an ultramafic VMS, so a bit different. We don't have the zinc and lead some of these other deposits have, but you know, the values can be there. Hera, that are really a mine, they made 80 million 1 year out of that ore body. Some of you will remember back in the day, Jabiru deposit, Jabiru Metals, with the Jaguar deposit was taken over by Independence Group for about 550 million. That deposit was only 1.8 million tonnes. It started 300 metres down. So we have ore bodies here from surface. If we can get to a development, then that will be a much better position economically, because we don't have to spend a year developing down to the ore body. We can develop from surface. So there's a lot of encouraging things about this relatively early stage, but like I said, hopefully have some high grade results out in the new year. So thank you for the opportunity to present the story.
Well, Geoff, thank you very much for sharing the presentation. It's very in-depth, and I think much like Brendan, it does look like there's a very exciting future on the horizon for what you're doing. If I had to ask you of one particular project that you would probably be, I suppose, most excited about over the next 12 months, what would it be for you? I
think, you know, the Laxia project's very exciting, because this area, we're seeing this fairly wide ore zone of potentially up to 10 metres or more at surface there in the shallow ad. It hasn't been drilled, so we're just keen to put a rig in and get that drill core out, and we should be doing that within a matter of weeks of listing. So investors aren't going to have to wait long till we've got some good news, hopefully. Yeah, no, it's terrific. And obviously, look, the ASX listing does take you so far in terms of potentially getting that extra investment there. It's not the only listing that you can achieve, of course, in this country. Are you looking to list on any other exchanges? We have a lot of interest out of Germany. We've got investors, but also a sort of informal partnership with the Karlsruhe Institute of Technology there. They've had a lot of their students and academics on our ground. They find the mineralisation and the ophiolite setting quite fascinating. So Frankfurt makes sense. It doesn't cost a lot to list in Frankfurt. A lot of Australian companies list there, so that's something we'll probably look at in due course. Yeah, tremendous. Now, what we might do, because we're still waiting on Bruce Maluish, our third expert, to join us here, we might throw a couple of questions to yourself and Brendan here, Geoff. So I'll start with you. Now, obviously, there's quite a few things that we do have to cover, so I'll try and pick just a few for now before we get into the perhaps the more intense questions a little bit later on. But what would you say in general would be your company's views on battery metals? Is this 100% the way of the future? Look, absolutely. I mean, as Brendan said, the chemistry is changing all the time with these batteries, and people worry about substitution. But as we've seen with lithium, the price has gone to a level where people are looking at other things. But because these factories are already being built, you're probably talking 10 years away from people phasing out things like lithium. So it's really a case of make hay while the sun shines. Yes, things like cobalt are expensive metals, so I think a lot of the new batteries won't use cobalt, but even if you have about 30% of the factories using cobalt, which I think is the number I heard, it's still creating a huge demand. And you know, as Brendan said, things like manganese, you don't hear about, but people are focused on you know, the things like graphite and lithium, but you know, the exponential demand from EVs, it's taking off, and we're still a few years away from that inflection point. Probably in 2025, 26, when the pricing will be such of an electric vehicle that you'll just have to buy one, and you'll suddenly see this huge take up. So it's not long away, and it's certainly it's happening already in places like Germany, with 1 in 5 new cars being electric.
I think you're 100% right as well regarding lithium. I mean, that's the main one we always hear about is lithium. It's the thing that everyone, I suppose, first decides to tack onto when they hear EVs or battery minerals in a long form sense. But obviously it's just one of very, very many. I mean, both yourself and Brendan are looking at that space with different minerals. The one thing you mentioned there as well to do with EV vehicles and potentially have that crossover point in say 2025 or 2026. Quite interestingly, earlier this week, we had a flying car that was actually in action in the United Arab Emirates. That was, I think, called the X2 from China. So that's now out there as well. Is that a space you can look at potentially?
No, it just looked like a supersized drone, and you know how they can fall out of the sky pretty easily. So, look, anything to do with the reducing emissions, I think there's going to be a massive uptake, and you know, with the way the technologies are evolving with these cars, and particularly with being able to integrate cheaper technologies to make these vehicles more affordable. Look, I don't know anyone who likes going and filling up their car now and paying $2 a litre. If you've got the convenience of being able to plug it at home, you know, possibly generate your own power from your own solar array to charge your vehicle just for day-to-day running around, why wouldn't you do it? You know, it's really coming down to that pricing point of getting these vehicles so they become more readily accessible for the you know, general families, and yeah, I mean, I certainly see a time where my kids may not know what a combustion engine is.
It's pretty crazy. My little niece already doesn't know what a CD player is, so that makes me feel extremely old. But I guess the other question I've got, because of course, you know, it's one thing to have the electric vehicle for personal usage where we're driving up and down highways, but there's obviously that big point where we take the minerals from the mines, they've got to get transported somewhere. Obviously that comes into play with giant trucks and things like that. So are we close to having, I suppose, completely electric functioning vehicles for those giant trucks that need to transport all these materials as well? Is that a reality in the next few years?
Oh, look, I think we will get there. It'll really come down to reducing the size of the battery pack, increasing the density of the battery pack, because you know, with a prime move, for example, the one I referred to, Janus Electric, I haven't really seen the detail of that, but I guess you don't want to be in a situation where you're loading up a truck, you know, half of it's full of batteries just to get it from point A to point B, and the rest of it's payload. So, yeah, there's probably a bit more work to be done on there, but you know, that's so exciting to be able to look at an electric truck that, with, you know, from two points of view, you know, from reducing operating costs significantly for a company like ours, but also just being able to offset those emissions.
100%. Well, guys, thank you for answering those questions. We do now have Bruce here with us. Bruce Maluish, I hope you're nice and ready to go, mate. I'll give you a quick little introduction so you can get yourself sorted and set up. But Brendan, thank you so much. Geoff, thank you as well for those questions. We'll come back and we'll have a few more before we close up today as well. But let's now move on to our third guest speaker and our final presentation for the day. It is going to be from the Managing Director of VRX Silica, Mr. Bruce Maluish. And Bruce holds more than 30 years of experience in the mining industry, spread over a wide range of resource sectors, including gold, nickel, and mineral sands, from open pits to underground. Organisations where he's held senior management posts include Monarch Group of Companies, Hill 50, and also Forsyth Mining. And his international experience includes identification of projects and negotiations with clients in Asian markets, which of course there is a huge demand for silica sand at the moment. And to take us through exactly that demand, and also what VRX Silica is doing at the moment, and to take a look further still at the ESG components of the company, I now turn it over to Bruce. Bruce, thanks so much for joining us.
Thanks, James. Actually, unfortunately, this is because of the white hair. It's actually closer to about 40 years in the industry. It's been an interesting exercise in the last few years, talking to overseas interests, and since we started looking at silica sand in 2017, we've got we get inquiries weekly. There's definitely some concern in Asia in sourcing silica sand, and everything from sort of foundry sand, lower quality sand, to the highest quality sand. Our Aeramentum project, which is the image behind me, strangely enough, it's what has naturally occurred, but it is the perfect size and shape for foundry sand. And while we've been awaiting our EPA approvals, we've done extra test work, and we've determined that this material can actually be turned into 3 or 4 different foundry products, and that's the case. So we can produce 4 foundry products and a glass making product, and the glass making from this would be flat glass, container glass, but flat glass also includes automobile glass, which is a unbelievably large industry and growing in China at an incredible rate. And it doesn't matter whether these vehicles are electric or internal combustion; they've still got the same number of same amount of glass in the car. So they're markets that we're pursuing with Aerosmith North. Our Muers project, which is closer to Perth, that's high quality sand, and it's able to produce a high clarity glass, and in fact that's called ultra clear glass. And the ultra clear glass is used in the manufacture of the cover glass, or the piece of glass that goes over the top of solar panels. And that's a market that is growing just at an incredible rate. There are estimates around 30% per year, but it could well be higher than that. So every single glass manufacturer in Asia wants to be making that glass, but they can only make it if they've got the quality sand. Our Muers project is probably amongst a handful of deposits, high-grade silica sand deposits in the world of that size. We've got more than 200 million tonnes there, and we've got a lot more room to expand on that too. It's an enormous resource. So, and it's each of our projects are blessed with a railway next door, so we can look at export. But they also have liquid natural gas, LNG gas pipelines. 2 pipelines run right past each of our projects, and in fact, the Muers project runs through right down through one side of it. So our aim ultimately for Muers is to be supplying a gas-fired glass making plant, particularly for high-quality ultra clear glass. So they're interesting projects. Each of our projects actually produce a product that is subtly different. And the subtle difference determines which market it goes into. For example, Muers is no good for foundry sand, but Aerosmith North is good for foundry sand, and it's good for making containers as well. The aluminium levels are the right sort of levels to make containers, but Muers doesn't. So, we have one more project as well at down near Esperance, and that is extremely fine. So it's a different market again. So each of our projects is not competing with each other for market, and we're currently undertaking our marketing managers on a road show at the moment through Korea, Japan, Taiwan. He's based in KL, and he's talking to a lot of buyers there. Because we just recently completed some bulk test work, we're able to produce all 4 foundry sand products from Aeramentum North, and also the glass sand. And we've sent out large samples to about 16 potential buyers. He's visiting about 12 of those over the next few days. And we expect to start negotiating offtake from that. And the delay there has really been to produce large samples. They need 50, 60 kilos each. So, we've had to do trial runs here, pilot plant runs at a ton at a time to produce enough sample to send off to these potential buyers. And out of that, we expect to sign enough offtake to be able to pull the trigger on Aeramentum North. Now, Aeramentum North, the next hurdle is EPA approval. We lodged what is close to the final document. It's actually the document that does get approved, the ERD Environmental Review Document. We actually lodged it in April. EPA told us they would have comments by June, and we expect them any day now. And until we get those comments, we can't necessarily revise the project or deal with those comments. So, but we're getting closer all the time. We see that any of the issues that have been raised by the EPA we've dealt with, but it does the rounds of all the government agencies. We'll get those comments back pretty soon, and we'll deal with that and move on to the next step. And the next step is for it to be published. It'll be for public comment, and then we deal with those comments, and then the EPA will make a recommendation to the minister. That's the progress at Aeramentum North. Aeramentum Central, which is just to the south of Aeramentum North. We've lodged the second stage document, which is an environmental scoping document. And that's a document that describes the studies and work that's required for the EPA to conduct its assessment. And it's largely the same as Aeramentum North. There's some small changes to it, but if the EPA approves that, well, then we have the next stage, the ERD, drafted and ready to go. Muers at the moment, we're conducting some detailed springtime studies down there to follow up on prior studies. This is about at least the third flora and fauna studies that we've conducted. But it's a little bit of an iterative process. We have a very large area of about 3,000 hectares. And through the prior studies, we're able to select a priority area that gives us the best quality sand, the largest amount per area, and the more benign environment. We've been able to select an area that has no priority species of flora, and there are no reported endangered or threatened species of flora or fauna. So we're able to select that area from the work that we've done over the last 3 or 4 years at Muers. So that will, we've also prepared the referral to go to the federal agencies and also the state agencies. We're really waiting on the comments to come back from Aeramentum North, and that'll give us an idea of the issues that the EPA may raise, and we can incorporate those into the referral for Muers. So that's progressing. We've done an enormous amount of work there. All the studies that we've done at Aeramentum North, we've repeated at our other projects. Our Boyup project down near Esperance, we've completed a desktop study, and they're a very widespread study, but once again, it allows us to hone into an area that we think is less contentious. I'll just run through the presentation pretty quickly. This is available on the ASX, and I think Kalkine's made it available as well. But it's really about silica sand, and silica sand is one of those products that you're surrounded by, but you don't take any notice of. And in fact, very little of it is used for manufacturing in Australia. almost everything in the way of plastics and paint and castings that we get into Australia are all imported. So they've always, domestically, particularly Asian countries and an awful lot of China has had adequate sand to make these products. But if you don't have sand, you can't make them. If you don't have sand, you can't make glass, you can't make solar panels, you can't make tyres. So they're desperately in need of silica sand, and they're running out. And the problem really is because of the concrete industry. Nearly 50 billion tonnes a year gets used in concrete, but the demand, this insatiable appetite for silica sand from the concrete industry takes away sand that could possibly be beneficiated to glass quality, and they're not getting a look in because of the concrete guys. So we've really got just silica sand projects. We had other projects and we've unloaded those. So we're absolutely silica oriented. We're the largest in Australia. We have the largest resources in Australia, over 1 billion tonnes. All of it's in Western Australia. It's a great mining jurisdiction. And we're leading with Aeramentum North and then Muers. So, we're all, the whole team's in WA, the company's incorporated in WA, the head office is here in Perth. We're very keen. We've got good government support. We've had quite a number of meetings with government agents, with government ministers. They're all very supportive, mainly because government does understand the sovereign risk to Australia, particularly in its efforts for decarbonisation. So Aeramentum North, it's plus 200 million tonnes. This metallurgical program that we've been through for the last 6 months is now being incorporated into a new reserve statement. So pretty soon we'll have our new resources and reserves. We've got enough reserves for about the first 8 to 10 years of production, which is all in proven reserves. We've just yesterday had a meeting with the Port Authority, a meeting with the rail owners. We've completed the water bore. We're finalising the application for the abstraction licence for water for Aeramentum North and also Aeramentum Central. And we're talking to a couple of power suppliers about how we can, all of our work to date's been based on an on-site diesel station, but we're meeting with groups to talk about gas. The environmental approvals, the environmental approvals are moving ahead, frustratingly slowly, but not much we can do about that other than just keep providing data whenever they ask for it, when or if. Aeramentum Central, as I said, it's at ESD. We've developed this method of rehabilitation whereby we take out a sod of earth using a modified front-end loader, and we immediately put it back to where we've been mining. It's called vegetation direct transfer, and there's some links on the website to have a look at that. It's surprisingly simple, but very, very effective in restoring this type of vegetation back to where it was. Muers is really the jewel in the crown, and we're looking to push that. It's a lot closer to Perth. It'll get a lot more scrutiny, so we need to know that we can get all our ducks in a row with Aeramentum North to move on to Muers. It's different vegetation, but all the low vegetation, the heath there, is the recalcitrant species. So the banksias are easy to propagate, and we can go and plant those. It's the rest of the low bushes that we've got to deal with. The processing, quite simple. Really, it's attritioning. which is an agitated slurry where you're really polishing the grains, and the rest of the process is really taking out the fines that are generated by the attrition. The VDT, it's worth while having a look at. We're very conscious of our ESG responsibilities, but we think the most important stage of dealing with many of the ESG components is at the planning stage. So we've been involved with native title groups. In fact, we're in the process of doing another heritage survey at Muers over the last 3 days. We're conscious of trying to reduce the amount of power we use in the plant and the plant design, where we get our power from. We've been quite innovative in using flotation for processing, and we're quite conscious of these responsibilities, but we do think that the majority of the gain here will be in the planning stage, which is why we're quite careful with all that. Corporately, we've got 558 million shares out there. At the current share price, we're market capped at about 76 million. We've got over $7 million in the bank. We're not busting for money. We're not spending a lot of money at the moment going through this EPA process. So we've got enough up to the decision to mine. Very experienced board. I guess one of our key men then is our marketing manager, Yanil Kim, and he's been selling silica sand for over 16 years, knows the markets extremely well, not just the foundry market, but also the glass market in all the Asian countries. So really, we're going to be here for a long time doing this. We're leading this sector of the ASX. There's quite a number of other companies that will get into this. Because of the demand that's coming out of Asia, I expect there to be quite a large silica sand sector in Australia and listed on the ASX. We're hoping to take advantage of the renewables that are being installed in the Midwest, particularly between Perth and Geraldton. I was at a conference just yesterday in Geraldton, and the guy there, one of the guys said there's 200 windmills now installed between Perth and Geraldton, and their plans for another 400. So it's going to, and solar farms galore. I'm not sure where they're going to get all the equipment from, but the amount of renewable energy being installed in this area is going to be huge. It'll become renewable central and probably hydrogen central, and hopefully we can get involved in glass making and use hydrogen to produce a green glass. And if we can, our long-term aim here is to get the development of glass manufacturing in this shape. So hopefully that's given you a snapshot of where VRX is sitting at the moment. Thank you very much.
Bruce, thanks so much for that, mate. And we really appreciate it as well. I know you've got a very busy schedule today, so being able to make the time for us and pop in a little bit later, really do appreciate that, mate.
Welcome, James. Thank you.
Now, for all three of you, we do have a few questions. And Bruce, given we got you here right now, we'll start with yourself. Let's begin with a bit of a general one here. What are VRX's future course of actions at the Aerosmith North project throughout 2023?
EPA and then construction. We've started buying equipment already. Some of the long lead items we've been able to buy second hand because we've had the time up our sleeve. We've been able to buy them and refurbish them. It saves a few bucks. But really, we want to be prepared to hit the ground running. As soon as the EPA says, okay, we want to be in action. So all the engineering's finished. Site surveys for geotech have all been finished. We're ready to go.
Yeah, tremendous. Brendan, I'll come to you now. And look, been a little bit of time since we heard your presentation, so let's just refresh the minds of some of our attendees. What would you say is the number one priority for Black Canyon right now?
Oh, look, our hands are pretty full right now with our flagship project at Flanagan Bore. So it's all about de-risking a project like this. And we've ticked the boxes. We've de-risked the resource, done the infill drilling, that's going to hopefully be completed in the next month. And then from there, it's just really stepping up the chain, looking at the processing side, beneficiation of the manganese. So we need to have a level of high confidence in that processing and removal of the shales and clays out of the manganese. And then the next cab off the rank is really processed water. That's always been identified as being important for any project, any mining project. You've got to have water. So that's what we're working on currently, and I've had that drill rig out there the last 2 weeks, exploring for water. Really need to ramp up stakeholder engagement. It's very important for any project. It's just understanding the stakeholders, level of interest in the region, and that can be the broader community as well. I mean, mining's not a new thing up in the Pilbara. You've had iron ore mines up there for the last 40 years, so they've sort of paved the way. There's good parts of that, and there's also challenges associated with that as well. And then environmental surveys, and as Bruce indicated, the amount of information you do need to provide to the regulators, there is a lot of information that we need to gather and assess and submit that to the regulators so they can make that call on how the project will be assessed and what approval pathway it's going to take. Hopefully the area we're in is not particularly environmentally sensitive, but we've got to do the test work we've got to do the surveys to find that out. So, and then the last thing I guess that we're doing is just regionally exploring. We've got 2,500 k's of WA, so that's a big chunk of the state. And we've done a lot of initial mapping and reconnaissance work, and there are a lot more targets we need to go out and drill. So we're kind of spoiled for choice at the moment with the activities we're undertaking, but that's why we do these jobs. It's exciting times, and looking forward to kicking more goals.
2,000 kilometres is certainly a very large swath of land, and just before we went live with this webinar, you and I were talking about some of those beautiful big brown highways. I'm sure you're going to get plenty of traction on those trying to cover that terrain. So a lot of work for you guys there at Black Canyon. Geoff, I'll come to you now with obviously there's the ASX listing, which is pending at the moment, and one of the ways that we tend to grow these big businesses in the mining world is to get acquisitions of new land and new projects. What is the general acquisition strategy that you pursue?
Yeah, so what is the acquisition strategy that we're pursuing? Is that what you said, or?
Yeah, that's the one, mate.
So look, I think as I mentioned with Cyprus, it's sat dormant for sort of 60 or 70 years, the mining industry largely. There's been some mining privately operated, and when you have private mines, they tend to be disputes amongst partners and funding issues. So mining industry, they mine 70 million tonnes of mostly copper and gold ore there. And there's a lot of places in Europe now that are being rediscovered, if you like. And whilst there's been a general feeling that Europe's too hard, I think for a lot of Australian companies that might have tried, and certainly in some jurisdictions that we've looked at, like Spain, the permitting can be quite difficult, so we're not there. What we're doing really is looking at the geology and adapting that mineralisation model to other areas in Europe where we're seeing similar sort of type of deposits. And I think a lot's changed in sort of 60, 70 years. If this sort of deposit we're seeing with these grades at surface was in any other country, and I've operated in Asia, in Africa, and not so much South America, but the same applies, you'd have hundreds of artisanal miners all digging these rocks up, putting them in bags and selling them to the Chinese. So it's quite unusual to have high-grade deposits at surface. And the modern geophysics and things like this, I think, can uncover deposits that aren't at surface. So we're taking our time. I mean, we know the sort of things we're looking at. We like nickel, cobalt, copper in particular due to the demand outlook and the pricing outlook. So, when you're a private company, you're sort of limited a bit in your budget for acquisitions, but hopefully once we're listed, we can probably expand our horizons a little bit. And certainly we're not some of the other minerals that have been talked about today, and bringing them into the portfolio if the opportunity is right, and even other countries. We're not necessarily wedded to wholly to Cyprus or Europe itself, but it kind of makes sense. We're in the EU, so it makes sense to have a focus there at the moment.
Well, Geoff, just if you, obviously that impending ASX listing is coming. Let's say you get a nice little capital boost there of potentially that $6 million mark that you're after. I know a lot of that is going to go to existing projects, but would you immediately then look to potentially acquire something that could also benefit the company?
Look, not all acquisitions have to involve cash. We're looking at other projects that may not involve cash, but sometimes you've got to get the vendor expectations set correctly. So we're not in a hurry. I think based on what we're looking at in the ground we've got, we're hoping to prove a resource and hopefully push towards a mine plan in coming years. So I think that's our focus. We don't want to get distracted chasing the latest fad. I think, as the other presenters would know in this business, it takes years to find the right resource at the right price. You can't be worried about short-term cycles. And bringing a mine into production is something that takes, people often quote 10 years, but hopefully not 10 years, but maybe less, but maybe 5 years. But it's not something that happens overnight. So I think you do need a degree of focus when you acquire a project, and of course you need to be open too that if the results don't deliver what you hope, then you've got to be flexible.
Yeah, I think you're 100% right. It's all about recalibrating as things unfold in a certain direction. Bruce, we'll come to you now, mate. I know you talked a little bit about this in the presentation, but I'm wondering if you can go into a bit more depth. How is the vegetation direct transfer plan helping in providing the best rehabilitation outcome for the sites that you're working with?
This vegetation behind me, it's called Quangan Heath, and it is a heath, so it's only about waist high. But as you can imagine, this is in loose sand, so the root systems on these only go down about 200-300 mil. These things are barely hanging on. So if we come along and take a sod of 400 mil deep, one, we keep all the roots intact, but more important, all the microbes that are in there, supporting the very limited amount of topsoil we've got, it keeps that intact as well. And also many of the invertebrates as well, the invertebrate fauna that might be scurrying around in there, which is mainly kangaroo ticks, I might add. It keeps all that intact, and it's a matter of picking up and moving it about 100 metres back behind us. So it's exposed for minutes only. And as long as we handle it very carefully, it keeps most of that intact. You keep that intact, you get all the species back. Now, we're not the first ones to have ever done it. It's a simple process, but our whole mining method is designed around the rehabilitation. This rehabilitation sort of clears an area for us to go and mine. But Silica trialled this a number of years ago. Now it's probably coming up 7 years. Now, fortunately, our environmental scientists that do our work also do a lot of work for Silica. So Silica were kind enough to give us the data. And in their trial, within about 3 years, they got about 40% of the species, and in 5 years, they got 80% of them returned. So you would think, 10, 15 years, we would get all the species back. And it's the species diversity is the issue when it comes to restoring this type of vegetation. So it's been demonstrated to be a far superior method to what is the conventional method. And if you're talking to Silica's mineral sands, you tend to bulldoze the material off the top, dig a great big hole, take the material out of bottom, backfill the hole, then bulldoze the material back across the top. So. And Silica have made the comment to us, if they could do this method, they would. Unfortunately, it doesn't fit their mining method. But they said it's such a better outcome that they would do it if they could. And they do it a little bit in a few places, but they don't really have the opportunities to do that. So it's really because of the type of vegetation. And the recalcitrant species here are the little grasses and sedges. and their root systems are only 100 mil deep. So they're the problem child, and they're the ones that are best dealt with using this BD2.
Well, Bruce, I mean, they often say that imitation is the highest form of flattery. So I think you might still get a few companies trying to do exactly what you're doing, mate. So it sounds like you're on the right path. What we will do, guys, we'll go one final round of questions for each of you, and then we'll wrap things up here. So Brendan, we'll come back to you, mate. And what would you say would be the next steps at the Flanagan Bore project?
So I've probably pointed on those previously. So it's really just getting that resource updated, and more metallurgical test work, and then hydrometallurgical test work as well in relation to producing manganese sulfate. We're running these two sort of streams in parallel. So manganese concentrate, develop a processing pathway to that, but also manganese sulfate for cathode material supply in feeding into the battery manufacturing sector. And then, probably more exploration. That's really important for the company to really grow the portfolio, grow the resources. We've got plenty of resource there at Flanagan Bore, but we're really looking now to the next stage, which is looking at growing some of these higher grade, they make smaller tonnage, but higher grade manganese deposits. And then understanding, how we get this project into market, and that has all the requirements for environmental approvals and permitting and access and all those components as well. So really that's where we're heading towards with the Flanagan Bore project. There's with manganese, we talked about the nickel and the cobalt. They're all important minerals as well into batteries. Manganese does become the lesser cousin to those, but I think over time it will dawn on some of the producers of these batteries that they also need quite a lot of manganese going forward. And if the chemistry changes to be more manganese focused, that should hopefully set up Black Canyon to be in the box seat with a couple of other ASX listed companies as well to benefit from that renewed interest in manganese.
Absolutely. And I mean, you mentioned as well in your presentation just how much your company is focusing solely on manganese. And do you think it has the ability to transform Black Canyon into one of those real big superpowers in the battery metal space moving forward?
Look, I think we'll be part of it. There's going to be a lot of winners out of this, and the early winners have been the lithium explorers, developers, now miners. Look at the market caps of those companies. Manganese would hopefully get to at least elevated amongst the position of those companies as well. But love to be a $5 billion market cap company. Manganese probably won't do that, but could we get to 200-300 million? Yeah, that's certainly achievable, particularly if we go down the manganese sulfate route and really show our credentials in that space. And if we manage to secure strategic alliances with battery manufacturers down the track as well, that's also going to really add to our story and give us the flavour. But really, baseload demand at the moment is going to come from the steel industry, and it's the expanding demand out of battery sector that will have that bit of appeal.
Yeah, tremendous. Well, Brendan, thank you so much for that, mate. Let's move on now to Geoff. Final question for you. Obviously, we know the ASX listing is the immediate focus for now, but what would you say would be the plans for the next 2 to 3 years? We
raise enough money, we've got a 2-year budget, that's how it operates. But if you get very good results and the market appreciates what you're doing, things can change, We just want to get a resource. That's probably a year away from once we start drilling. And then get into this deeper drilling. I think if we can prove our theory that the nickel cobalt grades increase with depth like at Muers, then that goes a long way to proving our theory that this project won't be depth constrained. And particularly if we start seeing some higher widths in the drilling, you can get your tonnages up pretty quickly. So that's our focus. Like a lot of resource companies, just got to drill. And we might move to 24-hour drilling or bring a second rig in. To do some regional drilling, things like that. But drilling takes time. Getting resources and a mine plan together takes time. So we've got sort of a 3 to 4 year plan with this asset to bring it to the stage of mine permitting.
Yeah, terrific. Well, thank you for that, Geoff. And what are your plans for the Asia Pacific markets, considering that you've received quite a substantial amount of interest from key players in the region?
Well, the biggest foundry industry in Asia is in Korea, so they're top of our list for the foundry sand. Japan also has a very large foundry industry, and of course a huge car making industry. So at the moment it's flat glass and foundry sand predominantly in Korea and Japan, and for now Taiwan. We think we would struggle to get funding for this based on a Chinese contract, but ultimately, we'll end up selling into China as well. But our contracts we're pursuing at the moment is particularly Korea, Japan, and Taiwan.
Thanks for that, Bruce. And just before I let you all go, final thoughts here. What do you want to leave with investors, potential new ones, existing ones who might also be tuning in today, and also a little bit of a chat about the ESG plan that you're all focusing on, and of course thoughts of being involved today. Bruce, you're on screen. We'll start with yourself.
Really, it's the silica sand is a very difficult commodity to research. You'll find plenty there about the supply side of the equation, but it is very difficult, unfortunately, for our shareholders or potential shareholders to understand the silica sand industry and where it all ends up, because it's such a diverse market. And also you can't research things like seaborne market. There is no seaborne market other than from Australia. All the Asian countries now have banned exports of silica sand. They're all concerned about their own domestic supply. So you can't even research that. You can't see where sand is going. And many of the large glass manufacturers are held within big multinationals. Asahi is the largest glass manufacturer in Asia. So unfortunately, it's very difficult to research. I try to tell and educate the market as much as I possibly can, but sometimes I don't think I'm winning. But it's difficult, but our projects are moving ahead. We will be in production, and hopefully next year, I'm fairly sure we'll get into production next year. And from then on, we can only build more production from more deposits into more markets. And it's really, it's all about Asia running out of sand. We want to be in the right place at the right time.
Bruce, thank you so much for that, mate. Let's now come to you, Brendan. Get your final thoughts in terms of what you want to leave with our attendees today, existing and potential new investors as well, and of course also the SCG plan.
Yeah, look,
or ESG, mentioned I say.
Yeah, I think where Black Canyon is, if there are investors out there who really like the exposure to the battery sector, they've probably got their portfolio filled out with lithium, nickel, cobalt explorers. You really could consider manganese, adding that one to your portfolio as well. I mean, we've got a very tight capital structure. We raised $5 million at the IPO, 20 cents. In April, we raised another $3.2 million at 33 cents. We're trading around, low to mid 20s at the moment, so at least above our IPO price. So we're well cashed up. We've got a very clear strategy to explore for manganese, develop manganese, and then look at the two product streams that can be developed through manganese as well: manganese concentrate and also manganese sulfate. With that manganese sulfate market, that is definitely could be a game changer in terms of diversification of supply outside of China, opening up markets into the US and into Europe as well. So we're working through those, but that's the ambitions. You got to pair back the ambition with the actual work that's in front of you as well, and we're really focused on making this resource robust. We've done that. Now we're looking at de-risking the metallurgical test work, understanding the beneficiation process, the hydrometallurgical processes in making manganese sulfate. Just all pieces of the puzzle that need to be put together to make a project into a mine. that's what we'll be working on, and then adding to that our further exploration potential. So people can go check out the website. Feel free to get in contact with me as well. And if there's any further questions, really happy to talk to people about manganese. Love the stuff, and hope to be involved in it for many years to come.
I think you'll be doing exactly that. Thank you so much for that, Brendan. It's it's an exciting time for your company and certainly for battery minerals in general. So all the best for the future, mate.
Thank you. Cheers, James.
And Geoff, final words from you, my friend. ESG plan, and also I suppose what you want to leave with our audience today and your existing and potential new investors.
Look, I think just on the ESG, I think that has to be often your number one concern, the environment, the social aspects. We've got a community in Cyprus that want to see mining developed. We're looking at low impact underground mining where we truck the ore probably to a central treatment plant, but we're a couple of years away from articulating that fully. But I think looking after your local community, looking after the environment. I know Brendan and Bruce are more advanced in their projects and are well aware of what you need to do. I mean, we're doing baseline water sampling and things like that already, even though we're years away from mining. But I think for investors out there, IPOs can be a good space. I mean, what you want to see is an IPO that's got a project really and focused management. And I think Brendan didn't list that long ago, but he's already made huge advances. And of course, Bruce with the Silica, it's often overlooked, and there's just massive demand. I know a friend of mine's making money selling sand to the Chinese in Asia. So, it's often overlooked, but can be very profitable. And we'll be fully funded for 2 years, and a lot of IPOs are going very well because you don't have the stale register you're often getting. People say to me, but there's a lot of cheap stock out there, for 10 million market cap or something, I can buy this or that. But the problem now, you're inheriting it potentially as a register that's tired. Share prices underperformed, but in some cases for a long time. So I think when you have a new story, tight register, and focused management who want to deliver, like I think all three companies today you're seeing, I think there's no reason why you shouldn't invest, because there's just a lot of positives. And we hope that, from our point of view, we can deliver on some of our promises.
Thank you for that, Geoff. A lot of promises, a lot of opportunities, and certainly plenty of potential across your company and, of course, our other two here today, Black Canyon and also VRX Silica. So great to have yourself and Aeramentum Resources here with us. And gents, it's been an absolute pleasure. That wraps us up here, and to our audience, if you do have any further questions, you can simply email us at webinar@kalkine.com.au or info@kalkine.com.au as well. Both those work. We can pass those on to our respective experts. Just address the title to which expert you'd like the question delivered to, and we'll pass it on to them. But for Brendan, Geoff, and also Bruce, thank you so much for your attendance today, guys.
Appreciate it.
Thanks,
Thanks.
Wonderful. Well, that brings an end to this InvestNest webinar. We hope you've enjoyed it. Next one won't be too far away. So, of course, until the next time, make sure to stay apprised and invest wise with Kalkine Media.